Money laundering remains one of the most significant challenges facing financial institutions globally. Traditional methods of combating suspicious activities, such as manual checks and rule-based systems, have become outdated as financial crimes have grown in complexity. Machine learning offers a modern, dynamic solution to this issue. By integrating machine learning into anti-money laundering (AML) efforts, financial institutions can enhance accuracy in monitoring and respond swiftly to potential threats. Machine learning versus traditional systems. Traditional rule-based systems, while useful, have significant limitations. They often generate a large number of false positives and fail to detect laundering activities that are cleverly disguised. Machine learning presents a major improvement. These algorithms can process vast amounts of data, identifying patterns that indicate illegal activities. Unlike static rule-based systems, machine learning algorithms adapt and learn from new data, making them more effective at combating the ever-evolving tactics of money laundering. Transaction monitoring. One of the most significant applications of machine learning in AML is transaction monitoring. Financial institutions process millions of transactions daily, and a portion of these could be part of a money laundering scheme. Machine learning models can analyze these transactions in real time, flagging anomalies that deviate from typical patterns. These models take into account factors such as transaction amounts, frequency, and geographic locations to detect suspicious activity more accurately and rapidly than traditional methods. Customer risk assessment machine learning is revolutionizing how financial institutions assess customer risk. Previously, banks relied on static risk profiles that were rarely updated. Machine learning allows for continuous monitoring of customer behavior, dynamically adjusting risk profiles based on changes in their transactions. This means that institutions can apply more rigorous measures where necessary and streamline processes for low-risk customers, optimizing the allocation of resources. Reducing false positives. A significant advantage of machine learning in AML is its ability to reduce false positives. Traditional systems often generate numerous unnecessary alerts, overwhelming compliance teams, and slowing down investigations. Machine learning, however, can distinguish between true anomalies and harmless deviations in transaction patterns. This allows compliance teams to focus their efforts on genuine threats, increasing the efficiency and effectiveness of AML efforts. Enhancing compliance reporting. The benefits of machine learning extend to compliance reporting, which is becoming increasingly important due to stricter regulations. Financial institutions face severe penalties for non-compliance. Machine learning can automate and optimize the preparation of compliance reports, ensuring they are comprehensive and adhere to regulatory standards. These models can also predict potential compliance issues before they arise, giving institutions the ability to address problems proactively. Challenges in machine learning for AML. Despite its advantages, integrating machine learning into AML processes is not without challenges. One of the primary issues is the quality of the data used to train these models. Incomplete or inaccurate data can lead to false predictions, undermining the effectiveness of machine learning systems. Additionally, machine learning models can sometimes be seen as black boxes, meaning their decision-making processes are not always transparent, which can create problems in industries that require clear explanations for regulatory compliance. The future of AML with machine learning. As machine learning technology continues to advance and more comprehensive data sets become available, its role in AML is set to expand. Financial institutions are likely to invest more heavily in models that are not only effective, but also transparent and explainable. The future of AML will involve leveraging machine learning's predictive capabilities while ensuring fairness, transparency, and adherence to regulatory standards. Machine learning and Know Your Customer (KYC) processes. The Know Your Customer (KYC) process is vital to financial institutions' efforts to prevent fraud, money laundering, and terrorist financing. Machine learning is significantly enhancing how institutions verify and monitor their clients. Traditionally, KYC processes required extensive manual work, but machine learning automates many of these tasks, improving accuracy and enhancing the customer experience. Automating identity verification. Machine learning is particularly effective at automating identity verification. By accessing global data sources and analyzing vast amounts of information, Machine learning algorithms can quickly verify customer identities and authenticate their documents. This automation reduces human error and accelerates the onboarding process, making it more efficient for both institutions and customers. Risk assessment and KYC. Another area where machine learning excels is risk assessment. By analyzing historical data, machine learning models can identify patterns associated with fraudulent activities, providing a more objective risk score for new clients. This allows institutions to make better-informed decisions and allocate resources effectively when assessing customers' risk levels. Ongoing due diligence. KYC is not a one-time process. Institutions must continuously monitor their clients to ensure that their profiles are up to date. Machine learning helps automate this ongoing due diligence by analyzing transaction data in real time and flagging suspicious activities. This continuous monitoring ensures that financial institutions remain compliant with evolving regulatory requirements. Challenges and future of machine learning in KYC. While machine learning offers significant benefits for KYC, it also presents challenges. One of the primary concerns is data privacy. Financial institutions must balance the efficiency of machine learning models with the need to protect sensitive customer information. Additionally, the black box nature of some machine learning models can make it difficult to explain decision-making processes. However, innovations like explainable AI and federated learning are likely to address these issues, making KYC processes more transparent and secure in the future. Machine learning for regulatory reporting. As financial regulations become increasingly complex, machine learning is transforming regulatory reporting. Traditional methods of regulatory reporting are resource-intensive and prone to errors. Machine learning automates these processes, increasing both accuracy and efficiency. Improving accuracy and efficiency. Machine learning algorithms can quickly process vast amounts of transaction data, enabling institutions to generate timely and accurate reports. This ensures compliance with regulations and minimizes the risk of penalties for incorrect or late submissions. Adapting to regulatory changes, regulations are constantly evolving, and machine learning models are highly adaptable. As new reporting requirements are introduced, machine learning models can be retrained to incorporate these changes, ensuring that institutions remain compliant with the latest regulations. Fraud detection and prevention techniques. Fraud remains a significant threat in the financial sector. As fraudulent schemes grow more sophisticated, businesses are adopting advanced technologies and strategies to detect and prevent fraud. Traditionally, fraud detection relied on manual monitoring and audits, which were time-consuming and prone to errors. Today, machine learning and other technology-driven analytics play a key role in creating robust fraud detection mechanisms. The role of technology in fraud detection technology, particularly machine learning, has revolutionized fraud detection. Machine learning algorithms can scan vast amounts of transaction data, identifying patterns that indicate fraudulent activities. Artificial intelligence, AI systems have also been developed to monitor transactions in real time, taking into account behavioral patterns, location data, and device usage to detect anomalies. Comprehensive strategies for fraud prevention. While technology is critical, it is most effective when part of a broader strategy. Regular staff training, ongoing risk assessments, and industry collaboration are essential components of fraud prevention. Businesses must educate their teams about the dangers of fraud and ensure that resources are allocated efficiently to address high-risk areas. Challenges and adaptations. Fraud detection and prevention face ongoing challenges. Cybercriminals are constantly evolving their methods, making it necessary for businesses to stay ahead of the curve. In addition, the growing volume of data and privacy concerns add to the complexity. Balancing the need for security with privacy concerns will continue to be a major focus in fraud prevention strategies. Compliance monitoring with machine learning. Machine learning has transformed compliance monitoring by automating the process and detecting risks more effectively. In sectors like finance and healthcare, machine learning models can monitor transactions and operational data for signs of noncompliance. Proactive risk management. One of the key advantages of machine learning in compliance monitoring is its ability to forecast potential compliance issues through predictive analytics. This proactive approach enables institutions to address compliance risks before they escalate, improving both regulatory adherence and operational efficiency.